This is Japan's 2 lost decades. When I first joined the industry or rather when I first looked at the market in year 2000, I was looking at a 1 lost decade, and I survived 2 lost decades. But now we are back in business again. Okay, you can see what happened during the lost decades. 1998, this line is 0, and this is the consumer price index, your inflation, excluding fresh food and energy. It has been negative since 1999. And your labor, your wages, same thing. This is average, moving average. It has come up to almost 1% growth per annum, but most of the time is below 1% growth. So you can imagine if your salary for the last 15, 20 years has been going down. This is what happened in Japan. Okay, the GDP of Japan. This line is Japan. Okay, this is China, and everyone else is above Japan. So this is the sad state of affairs in Japan before Abenomics. And finally, the killer blow, okay, was not from Japan, but from the Lehman crisis. After Lehman crisis, the US pump prime the economy, they flooded the market with their QE. Then you had Europe with their own crisis, and they also had their QE. And what happens is, with all this QE, Japan's currency strengthened, and when Japan's currency strengthens, their exporters, well, they lose money. Okay, their profits drop, and then when their profits drop, they have to cut wages. When they cut wages, people have no money to spend, there's a decline in consumption, and then there's competition for the consumer's dollar, and you cut prices. And we have cut prices, basically this deflation. There's a rise in real interest rate, which in turn leads to a strong yen. So they were in this vicious cycle in Japan, and you can see this is the currency, the black line. Since the Lehman crisis, it has been going one way, and so has the stock market. Okay, this is the currency, and this is the stock market is also going one way. So this is what happened to Japan up to the end of 2012. Okay, so what Prime Minister Abe, he came into power right at the end. Okay, they had an election and he won. And how he won the election is his Abenomics. He was telling the people he wants to reverse the whole situation. Okay, so to reverse the whole situation, you have to reverse the strong yen, you have to reverse deflation, and you have to revitalize the economy. So his 3 arrows, okay, his 3-pronged approach. First, the most important and the most immediate effect, expansionary monetary policies. He appointed a new BOJ governor, Kuroda. Even before that, people knew what was going to happen because the previous BOJ governor was about to retire. And he started his massive quantitative easing from April last year. Okay, his target is to raise inflation to 2%. Okay, and you probably would have known by now the policies. The moment he stepped into power, he did huge fiscal spending, 10 trillion, and finally he hiked consumption tax to balance the budget in Japan. And you will have known that consumption tax hike was in April this year, and that has caused the economy to slow. And later I'll talk about what's going to happen next. And finally, he had his growth strategy. One of the growth strategies is, for example, is free trade agreements. Okay, and a lot of other things that I will explain further. Okay, this is what happened with the first arrow, which is your expansionary monetary policies. You can see after Lehman crisis, US, this FRB is the US Federal Reserve. They did a QE1, QE2, and QE3, and then now they are stopping, right? They have just stopped their QE, and very likely they will cut back and they will hike the interest rates. And Europe had their own crisis, and they also pump prime the economy. In fact, during the Lehman crisis, they also did their QE, and Japan didn't until Kuroda stepped in. So by now, Japan is the country with the most expansionary or the easiest monetary policy now. Okay, maybe Europe will follow suit as well, because Europe is also not in a good state. But Japan, despite having the economy recover, is continuing its QE. Okay, this is the effect on the economy. You can see that there's a effect of the consumption tax hike, and then instead of this number, this was quite old, it's now a negative. So we have 2 quarters of GDP decline, which means there is a recession in Japan now. So what is going to happen next? Okay, some of the growth strategies that Abenomics promised, all the free trade agreements, and also he wants corporate tax reforms, and on top of corporate tax to incentivize investments and things like that, he's also looking at cutting corporate tax. In Japan, your corporate tax is almost is about 36.5 now. It used to be around 39%, the highest, among the highest in the world, together with the US. Okay, your competitors for Japan, who are they? The Europeans, the Koreans, the Chinese. Okay, those are around 25 to 30% tax rate. Okay, Japan is simply too high to compete. Okay, compete what? Compete for investments into the country. Okay, also competition among the what you call that? The companies. Okay, how much profit you can make. So they are looking to cut taxes. Okay, so that they make companies more competitive, to make Japan more competitive. Okay, they are also doing restructuring, or rather reform. Okay, there are a lot of labor laws in Japan that need to be reformed. So they set up special economic zones for them to, as a test bed for these reforms to be implemented. That has only just started. They have enacted the law, but they are going to come up with a plan. So these things take time. Okay, and there are a lot of other regulatory reforms. Okay, so you can see that this is the bear market, and you can see after your Abenomics, the market rallied strongly. By now, actually, it's up further. This is the outdated chart. The yen is now 116, around 116 today. It's back. You can see that pre-Abenomics, the yen is around 110 to 120. So we are now back there. But the market is not back there yet. Okay. This is the sensitivity of the earnings to your currency, which is probably is about 5 to 6% sensitivity for every 1 yen move. So as the yen weakens, your currency will, your earnings will keep improving in Japan. And shareholders' returns have been improving. This is a forecast for profits and dividends. You can see that it's hitting new highs for dividends. The Japanese are actually increasing dividends. There are 2 things that's happening, or that the government has implemented in Japan. Very important is your governance, corporate governance, and also your Stewardship Act. Okay, they are trying to make the pension funds be more responsible to the unit, or rather their shareholders, by voting at company meetings or company AGMs. Because in the past, pension funds, they are very passive. They will let the management do whatever they want. Okay, but with the Stewardship Code, they are making the pension fund managers be more active to act on behalf of the people who they manage the money for. That's the Stewardship Act code. There's also a governance code, which is making the companies more responsible to the shareholders. Okay, again, that is very important. You can see probably a lot of the things that happened in the past in Japan is a lot of the companies will act not for the shareholders, but actually maybe for the company, for their partners, okay, their suppliers, their customers, their own employees. So now with a governance code, okay, they need to also act, or they need to act for shareholders as well. So to make sure that they are following, they are acting in the best interest of shareholders. Okay, and GPIF, recently on the same day that the BOJ expanded their monetary policy, the GPIF is actually the largest public pension fund in Japan. It's about 127 trillion yen worth of assets. They used to be, you can see it used to be 60% bonds and only 12% equities, compared to, say, the California. This is the largest pension fund in US, over 60% in equities. Okay, but they have now switched. They have cut the bond holdings target from 60 to 35%, and shifting the money, okay, from 12% in equities to 25%. Okay, the target is now 25%, and they're shifting the rest overseas into overseas bonds and equities. And what's the effect of that? Effectively, basically, you are selling off your bonds and buying equities, right? And also you are buying overseas. When you buy overseas, you have to sell yen and buy whatever currency, which also weakens the yen. Okay, and why are they doing that? One of the reasons the government wants them to do that is instead of deflation. For example, if you are a pension fund manager last time, there's deflation in Japan, right? So as long as I don't lose money on my investment, I'm better off. Every year I'm better off because everyone else, all the prices are going down. The same dollar will buy me more things 1 year later. But now it's different. Now they have pushed inflation in Japan. The same dollar will not buy you the same thing next year. So you need greater returns. That's why to get greater returns, you cannot just own bonds. Okay, the 10-year bond yield or 10-year bond is giving you 0.5, 0.6% per annum. Okay, that's not good enough. So they have to buy equities. So you see, this is a government effort. On the one hand, they are making the companies be more responsible to the shareholders, making them pay higher dividends, be more responsible. On the other hand, they are pushing the GPIF, the pension funds, to put more money into equities. Okay, so it's not just one way. It's actually, you can see that it's a coordinated effort by the government to ensure that there's some kind of inflation expectation in Japan and for people to start investing more into risky assets. And the BOJ is also helping. Okay, they are not only just buying bonds. For example, their QE is not just buying bonds in Japan. Of course, when they buy bonds, it's a good thing, right? Because GPIF needs to sell their bonds, right? And then the BOJ just come in and sweep out everything. Okay, at the same time, they're also buying equities through the ETFs. And so that is a very positive development in Japan. And individual investors are the biggest investors, or they have the biggest amount of money in Japan, but they are actually not using it. So it's very difficult to get investors in Japan or the household in Japan to use their money. So they came out with the NISA program. Okay, unfortunately, the NISA program is very simple. It's tax-free. In Japan, when you make money, when you make money, you actually get taxed 20%. Okay, on your dividends, on your profit. So there's this NISA program that says, okay, you don't have to pay any tax, and everyone gets $1 million of investment that's tax-free. But unfortunately, not a lot of takers, to take up this program in Japan. Okay, I realized that actually this is a very old set of slides. I probably should talk you through what you have in your hands. The pages, you will come to a page where there's corporate profits rebounding, followed by shareholders' returns to improve further. And this is what I'm talking about. I'm sorry there's no paging here, but it's quite early at the front. You can see that the topics EPS under the corporate profits rebounding. You can see the two red lines are actually getting new highs. That means Japan profits are reaching new highs, record highs this year. You already reached record highs last year and it's getting to a new high this year. And your shareholders' returns, you can see the dividends are rising. Your share buybacks, you can see on the right side of the chart, the orange lines. Okay, that's a 3.3 trillion worth of share buybacks announced so far for the first 10 months. And that's the highest since the Lehman crisis. And I'm sure it's going higher because the profits are going higher. And in the next page is what I just mentioned, the GPIF. Okay, next I want to talk about the current market outlook. Okay, what is the problem in Japan now? As you have seen, the GDP numbers came out already. And these are the leading indicators, what I've shown in this chart, the industrial production index. You can see that there was a recent peak, and that was before the consumption tax hike when industrial production shot up, and thereafter it's come down. And in the recent last number is a slight pickup, that's September. And same thing, consumer confidence came down when they announced the consumption tax hike, recovered a bit and is now coming down. So there's actually very weak consumption and sentiment in Japan. And you can see the next page, the global PMIs. PMIs are purchasing manager indexes. Basically, it's an indication of future purchases and production. You can see US is going very strong. Okay, the blue line. Japan, you can see after the consumption tax hike came down, the green line, and it's recovering slightly. So it's all not not all bad news. The last point in Japan is a tick up. It's actually October. So October is looking better than September already. Okay, but you can see the other markets, the other countries, Europe and China, not doing so well. So you can see the global economy is not in a great shape, except for the US. Okay, so what's the problem now? So you have a weak economy, and then you have the tax hike in Japan. There's a dampening demand. So the rumor now, or rather the newspapers are all speculating, Prime Minister Abe is going to call for a snap election. Okay, why is he calling for a snap election? Because based on the previous bill that was passed for the consumption tax, he has to do one in April this year, which he has done, and do another one in October 2015. A second tax hike, 2%, to bring it from 8 to 10. Now, with this weak economy, he wants to stop. He doesn't want to do it, go ahead, but he needs a new bill. And he needs to have a new law to change it. So he wants the people to agree to it. He can do it, but he wants to have a call election for people to agree that he will postpone the second tax hike. Okay, another reason which is more political is at the moment there's no strong opposition in Japan. So his popularity rating is still quite high. So he is 2 years into his tenure already. It's usually 4 years before the next election. He has 2 years has passed, his popularity has not gone down the drain. He does a election now, a snap election, he gets another 4 years to do what he wants to do, which is positive for us. Why? Because what he wants to do is to bring the economy up. So I believe he will call election, and you can expect it anytime. And it's already being speculated in the newspapers. Okay, so if it happens, don't be surprised, but it's a net positive because if he wins, unless he loses, okay, loses is a big problem. Okay, if he wins, okay, it's going to be another 4 years of mandate, another 4 years of Abenomics. So that is a net positive. Okay, so that's my assessment. And the other thing is, you can see what has happened. BOJ, looking at what's happening now, did a second QE. The GPIF is actually, the hand was forced by the government. The government came out with this GPF reform, okay, and they had to adhere to what the government wanted. So you can see that what's going on in Japan is they are all trying their best to boost inflation, to make the economy stronger. And we haven't seen this in a very long time in Japan. Okay, in Japan it's not always about companies, about profits. There are a lot of other issues that they deal with. But for the first time in a very long while, or at least since I have been managing the market, this is the first time when both the government, the BOJ, and the bureaucrats are all in agreement that Japan needs to be stronger, the market needs to be healthier, and actually it's good for investors. So this is my conclusion. Okay, you can see my conclusion that this is the first time in a very long while that we have this kind of very positive scenario. But everyone is still very worried about, like what I showed you, the global cycle. The cycle is not good. But the cycle is just a cycle, right? It's 1-2 years of weakness and then recovery. But the structural change is real. The structural change in Japan is real. So this is actually a very good opportunity to get into the market before everyone realizes, all the structural changes that are ongoing in Japan. Okay, so that is what I want to say about the market. And one more thing is for people who are not familiar with what you can find in the Japan market. I'm sure our colleague from Japan will talk about stocks in Japan later. But I can show you there's a list of stocks. I've listed down a list of stocks. Anything you can see, you can look at the brand, most likely it's going to be listed in Japan. Okay, right down to the pencil. Your Pilot pencil, your pens, okay, they are listed. Okay, your vacuum flask, they are listed. All the cars, obviously, all the car brands are listed. Even things that you cannot see, they are listed. So your iPhone, is all from Apple, but actually you can see, I've listed down. The capacitors by Murata. Okay, the NAND flash is from this Toshiba, and then your CMOS sensors, the sensors from the cameras from Sony, and the batteries from TDK. So they are all Japanese. The components are Japanese. The assemblers are Taiwanese and doing it in China. Okay, the brand is Apple, but components are Japanese. Okay. Okay, this is so Japanese have a lot of hidden brands that you can find, and we are here. We try to find those companies, the top companies in Japan. Okay, and so you can buy your stocks yourself. No, I'm not going to recommend any stocks to you. I'm going to recommend my fund. Okay, the Japan Growth Fund. If you are not a specialist in Japan, okay, you need a specialist to do it for you. So, Japan Growth Fund is just want to introduce to you. The first page is probably quite important. The investment objective, we look for mid to smaller caps in this fund. Our focus is on higher growth relative to peers, and we place a lot of emphasis on the long-term earnings. Okay, so it's a very diversified fund. Okay, we have 90 over stocks. So in Japan there are like 1,000 over stocks. Okay, so it's not so diversified after all. But we try to find the best companies in Japan, and we try to find the smaller companies that have a higher growth. Okay, another important point is the funds on the Phillip Securities platform. We used to have just the Japan fund that is in Sing dollar, Japan growth in Sing dollar, which means that when the yen weakens, what happens is if you are a Sing dollar investor, you make money on your stocks, but you lose on the currency because the yen is weaker against Sing. Now we have the Sing dollar hedge class, which means that it's hedged. What you get from the stock market gains, you keep, because we hedge the currency. That means when the yen weakens, you don't lose. It's similar, almost the same as investing in yen. You just get the upside from the market, up or downside from the market. Okay, you don't get the currency effect. Okay, so that's a hedge class. So that's the difference between the Japan growth, which is in Sing dollar, and the Japan growth, the hedge class. You can see the rest. The performance is a very good track record. The performance over the long period, is always beaten the benchmark. But you can see that it hasn't been great because the Japan market hasn't been great. But that's going to change, right? That has changed in the last 2 years. Okay, the market going forward looks a lot better than it has in the last 20 years. You can go through the list of stocks that we have, the top holdings, but I leave the stock picking to our next speaker. And just further advertisement for this fund is the list of awards. Okay, we have been winning awards since we're managing the fund. So this is not it's not a fly-by-night fund manager. We are here to stay, and we are real fund managers. Team, you can have a look at the team we have. It's me and 2 other guys, both very experienced. So it's a very small team, but we work very well together, and basically our job is to pick the stocks for you. So I think that's it for me. I'll leave it to the next speaker. Thanks.
Thank you very much for the time, and let me introduce me first. My name is Nakayama. I entered the financial industry almost late 1980s, so exactly the most same decade what Ban Yew mentioned, the lost decades. My main background was trading for proprietary and agency. So tonight, I would like to explain and share what I used to do and what I see the market with you. Then if I can contribute to efficient money management or investment, I'll be very happy about that. So this is one of the largest equity market. Over 3,000 names are listed. Very good liquidity. Then if you watch Japan news and so on, you can many materials like research reports or things like Abenomics, GPIF and so on. Or you can pick up some names from ranking, daily what most active or weekly gainers and so on. Or you can some names from your favorite food like ramen and so on. Then This is Nikkei chart for last 10 years. Looks not so that attractive yet. It's in the range. But now, comparing the bubble area, late 1980s, Nikkei was around 38,000. Now it's 17 something. But at that time, PER was almost 100 times. Then yield is less than 1%, almost 0.5, 0.7 something. But right now, PER is almost 17 and 15. Then yield will be around 1.7, 1.5, and very reasonable to invest at this moment. Then there's a couple of stories going on right now. One is Kuroda Bazooka. It is the same when Mr. Ban Yew mentioned at the end of August, end of October, BOJ did a surprising easing. Then this is Abenomics, very positive to the Japan equity market. Then this is the GPIF, Government Pension Investment Fund. They are going to raise the allocation to the stock market. Then Japan will host Olympic Games 2020. They're going to be the big investment to the infrastructure or construction. Then a couple of things going on. But before you pick up your phone or click the buy button, please think about your strategy or time frame, which will be convenient and comfortable for you. Sometimes you want to hold years, maybe months, weeks, days, maybe minutes, too short. To make the investment efficient, please check the trend. This is a kind of a technical thing. Better not to go against the market. When I was a young trader, I was told, do not open your mouth against the falling knife, like this. There's a guy sitting next to me, is pretty much good at the PowerPoint slide, and he took 1 hour to make this. Then let me explain very basic of trend. This is the uptrend. Higher high, higher low. Looks like this. Then there's a easiest chances, 2 chances over there. One is a breakout of a previous high or correction and going back to the trend. This is the most simple entering point. Then this is a real example of the market. This is the Taisei, code 1801. This is a typical name of the Olympic related, one major construction name. Then if you look at the chart, this is the example of a breakout. Comparing this previous high, then breakout. Then as a point of a trader's view, how these stocks move like this. Then at first time, this green line supported the market. This one is, I used the 3 types of moving average, 13 weeks moving average, 26 week moving average, 52 weeks moving average. Then 13 is almost quarter, 3 months. 26 is a half year. 52 is a 1 year. It means most of majority moving, these stocks are moving in favor for most of the majorities for more than 1 year term. Then first this one is supported, then this is the touch of this quarterly moving average, then going back to trend, then this is the second chance. Then this is the spike here. This is the announcement of 2020 Olympic Games in Tokyo. Everybody took a jump, but get hurt with machines. Then anyway, there are two examples of correction or three examples of breakout. But the problem is, if you look back the chart, it's easier to tell this is the point. Looking back, the problem is how this stock will move from now. Then, from my point of view, what I see is, if Taisei breaks this high with relatively huge volume, with like very long line like this seems to be the light breakout. Or this half-year moving average support this Taisei very well. So if the market touches this here, then next bar breaks the previous high. This may be the chance. This is one of the example of uptrend. Then second one is Taiheiyo Cement. This is a cement company, almost also related to the Olympic Games, kind of an infrastructure. This moves same, then this time is almost same. After the Olympic announcement, market go high. Then this is the breakout, then supported by half-year moving average. But this time it didn't work. This is the basic idea of downtrend. If the name is going in along with the downtrend, better to think sell. Better not to think buy. It's the same. Chances breakout or correction when stock price moving down to the downtrend again. This might be the chance. Then this is the example of DNA, one of the gaming company. Game industry is pretty much tough competition. So it was competing very narrow margin right now. Then some are doing very well, like a Mixi 2-1-2-1 is very doing well, but the DNA is relatively competitive. Suffering. Then there's a breakdown here. Then better to think, sell. Then touches the moving average. Then breakout down here. For those names, my recommendation is better not to think where to buy. Just going down. Then second example is Nikon. Nikon is one major product, digital camera. But digital camera is competing with the iPhones, mobile camera, mobile phones. Then this timing was they released a very bad fiscal number, so market was sold so sharply. Since then, Nikon is following very clear downtrend. For names those downtrend, better when to sell until market breaks this moving average. The second one is just mixing high low. This is a completely discount. Maybe just leave it should be better, or try buy sell high or buy low may work, but let be difficult. Sometimes you can make money with this moving, but once it breaks up, you will lose twice easily. So better be careful. Yeah, this one also, the guy next to me made this. Okay, so let me speak about some things, details. One is Kuroda-san's surprisingly bazooka. They very huge liquidity, yen is weakening. Comparing the time before Lehman shock, it was 120, now it's 117. So there's some room for yen going down, but as for the stock market, weaker yen is much positive impact than negative impact in Japan market. Some politicians or some small companies complain weak yen, but comparing this area, it thinks maybe some way to go. But to be honest, I exchanged my yen to Singapore. I really sensed yen is weakening. My personal idea, Singapore should be in the 80s, but now it was charged, take me 95 or something. Yen is very weak now. Then for actual names, weakening yen is favor to the old or electronics company, who's exporting their product. Then besides, BOJ is going to buy ETF in the exchange traded funds, like into the index. They are going to buy 3 trillion yen. Also, they are going to buy REIT, real estate fund. Then next is Abenomics. This is not for maybe typical name, but just for the positive background to the Japan equity. Increasing money base, enlarging the amount of government budget, easing policy creates, then sustainable economic growth, GDP 3%, super Abe-san, by my Abenomics. I can't tell some typical industry, but investing in Japan is positive to the financial industry like exchange or security firms like Nomura, Mitsubishi UFJ, and so on. This one example. Then next is GPIF, Government Pension Investment Fund. They are going to increase the allocation to the stock. Exactly same as Mr. Yeah, they're going to increase the allocation to the domestic stock from 12 to 25%. Then also increase the foreign equity allocation from 12 to 25. So total equity allocation will be almost half. They used to focus on more stability, but just following to the inflation rate, the performance will be more important to them. Then as a benchmark, they will watch the ROE, return on equity. It means the power of how the company can earn. The formula is ROE, EPS divided by BPS, earnings per share by book value per share. This means healthier the company can make tends to get a higher ROE. But things need to be careful is the company, sometimes that company reduces their book value instead of earnings. In that case, ROE gets higher, so we need to be better careful about that. For example of the higher ROE companies, maybe just pure invest into the new index, JPX 400. This is the new type of index which GPI might use for their benchmark. Then some of their heaviest construction of this index are SoftBank 9984 or Takeda Pharmacy Company 4502, 2020 Olympic Games. This one looks like a spaceship. But somehow this might be the design of the new national stadium. I don't know how they can make it or not, but anyway, the main thing on the construction, infrastructure, and also Japan is very positive about the tourism from non-residents. Then, to be honest, I sense that recently Tokyo is getting more foreigner friendly in English signs or even cab driver speaks English. Please visit Japan if you have. Then there's some stock picks from our team. Then we made a model portfolio. Then we picked main six names from our model portfolio. One is Nihon M&A Center, code 2127. This is M&A advisory company, mainly for mid and small companies. Then this makes the company looks more attractive, valuation, management buyout, organization change, and a more efficient operation. But besides this, this company contributes and helps the aging society of Japan market, because some companies management of some companies getting older. They are looking for someone who can succeed their business. But small companies sometimes have a difficulty to get second generation people, but they support those succession of the business. So this is not for M&A, but maybe whole business restructuring thing. Then chart looks like this. Very beautiful uptrend. Then if I see this chart, I will not jump in this point. Maybe I will wait. This stock will touch this green line or something. Then I will wait after touch. When next buy breaks this high, I think I will buy until I do it. Then second name is Nissin Food Holdings. I think Capital may be familiar in Singapore also. They are very stable, then a very life-related, sustainable and stable company. Maybe we don't need to mention a lot about this. ROE seems to be 8% or something. Then chart looks like this. Maybe don't need to mention also. Half year moving average supports very well. So I wait. Stock price touched here, or wait until break of this high. And if I go just sidelines, if you if you are watching a breakout buy, this is very relatively high, because most of the time breakout fails. Maybe probability will be less than 50%, maybe 40 or 30%. But if it works, performance will be very high. So in case breakout fails, I better recommend loss cut in case stock price go beyond here. Go below here. The next one is NIDEC. I'm really surprised because this is our random pickup, but NIDEC shows one of the main holdings of Lion Global Investment Fund. Then this is one is related to the weakening yen. Then this main products works for the iPhone and so on. Very stable. Then this company's founder, Nagamori-san, is very famous and a charismatic CEO. They expand their business through M&A very aggressively. Then this corporate logo is green. Do you know what? Because Nagamori-san likes green color very well. He appears in TV or newspaper so often. Then if you have a chance to the picture of Nagahori-san, please check out his tie. He always wear green ties. I'm not so familiar with Feng Shui, but according to Feng Shui, green is a good color, right? Okay, so the chart looks like this. Yeah, just up 20. Don't need to measure all. Okay, next one is Mazda. There's a couple of huge car makers in Japan. Nissan, Toyota, Honda, and Mazda also. But comparing those major companies, Mazda gets very high ROE, almost 27%. It means the power of earnings pretty much stronger than those huge companies. Maybe they are using their capital efficiently. Then the stock price is like this. To be honest, it's in range now. So maybe just wait until the 2000. But in case stock price breaks this sharply, better get out. But should be okay. Then next is unit chart 8113. This is very well related to the healthcare, life, and also the aging. Then the CEO of Unicham is name is Takamori-san, the successor of his father. But he's very stock price conscious. Sometimes, most of the time, the top management is very conscious about stock price. That company is very good to invest. Then once I read one episode in their interview, Takamori-san, every night Takamori-san going back to the home, he was asked by his wife and his daughter, where's the market of the stock price? This company should be very good. Then stock price is very stable. Okay. Next one is Japan Exchange. One is the typical for the Abenomics. This is just exchange itself. Then capital is almost $100 million. Then there's many business exchanges in the world, but comparing to the SGX, then comparing the turnover, most of the people says Japan exchange is relatively cheaper than SGX. Sometimes they're called undervalued. Yeah, stock price is maybe the range of between 2,000 and 3,000. That should be stable. Okay, those six main pick up from our model portfolio. Okay, then if you buy some stocks, please think about where to exit. You don't need to stick that stock forever. You just, when things go wrong, just let it go. Or sometimes stock price going so higher, but let the profit run. Then, from my experience, I found this number 2 to 1. This means pain catches me 2 times bigger than pleasure. So, when stock price is going, we do a favor, please take some profit with partially, then leave it. I strongly recommend that style. Tends to be a fortune teller, buy the deep long or sell very high top. For me, it's better to consider it's impossible. Or sometimes things go wrong, just pray. Better not to pray. especially for the financial market. Then stock price tell you when you're wrong. Sometimes a break of trend, just let it go. And this is an example of this is the Okabe. This is also related to construction. This is the machinery leasing company called 5959. It used to be a very stable uptrend supported by half-year moving average. Then I saw stock price will go back to the uptrend with this breakout this high. But unfortunately it did not. Then went down. Then try some turn, but finally it breaks the 1 year moving average. So it says I'm wrong. Then cut off here. Chopping A. But after found very big breakout here, then tried fast rebound here, but it didn't work. Then cut off here. Then if you look back this time, stock price was supported for a long time. So if this works, stock price should go up after the support of 1 year average, but it didn't. So this Lincoln motivation tells me I'm wrong twice. Then finally, just let me talk about money management thing. When I was starting a career as a trader, I was asked by a senior trader 2 questions. Which way would you like? You can win $500 with 80% probability, or you can $1,500 with 40% probability. Which one would you like? My answer was this one, because kind of stable. But I was told I'm wrong. If I want to make a big money, you just calculate, because 580% the probability are expectation 400, 40% the expectation to be 600. If you keep doing it, you need to bet higher probability, higher expectation. Then I was asked second question. If you lose 500 with 80%, or I want to lose 1,500 with 40%. This is 80, almost sure I'm going to lose. This is 40% or less than 50%. Okay, let's bet this one. But I was told I'm wrong, because I thought a lot. I got a very good training. This means count loss first or let profit run. This is a kind of a mental game. But from my experience, answer is not only one. Everybody has their own styles. So if you are comfortable with this one, winning by 500 with 80% probability, you can't lose more than $1,000 each time. Then the strategy will make sense for you. This one, 400 against 400 profit and 200 loss. So this one is 2 to 1. And the same thing here. You can win $1,500 with 40%, expected profit will be 600. Then you can lose, if you can lose less than $300, you should be okay. It means you can lose bigger than 500 each time. From my experience, breakout or chart stuff, this is more realistically. Probability hard to reach this 80%. Probability should be almost 50 or less, including a slippage. Then this is vice versa. If you are comfortable with lose 500 with 80% probability, then you need to make $4,000 each time. this might be a little bit difficult, but if you can find this strategy, it still makes sense. Then, if you lose 1,540%, expected loss will be 600. If you are comfortable with this strategy, you need to make more than $2,000 each time. So, according to the probability and star, answer is not one. Please find your comfortable trading style. Then this is just a process. Don't need to be so hot, don't need to be so cool. Just keep your strategy doing the job. Then, of course, not to say, do not put your all eggs in a basket. This one is also made by guy next to me. Then, if you pick up one or two names, maybe hard to diversify, or so in that case, please invest the money into your Lion Global Investment. If you can make a portfolio more than 10 names, please make your strategy. Thank you very much.